Hi, this is Jinrong, Market Strategist for IG Singapore. Last week, Wall Street took comfort with a dovish takeaway from the recent Fed meeting, and along with signs of weakness in US labor conditions, that seems to pave the way for the US Federal Reserve to consider earlier rate cuts. This triggered a recovery in risk sentiments, with major US indices bouncing off their mid-April 2024 low to potentially eye for a retest of their respective record highs. Heading into a new week, here are three things on our radar. First up, we have the US CPI data out on Wednesday. The dovish takeaway in the recent Fed meeting and easing US labor conditions have led markets to price for a Fed rate cut potentially in September this year. That said, US policymakers mentioned that they are still on the lookout for further progress on inflation, and the upcoming CPI data will determine if markets have actually gotten ahead of themselves in their rate pricing. Expectations are for both US headline and core consumer prices to increase 0.3% month on month, which will be lower than the 0.4% in the previous month. Next up, we have Japan's first quarter GDP data out on Thursday. In the fourth quarter, Japan's economy managed to avoid a technical recession due to a better than expected increase in capital expenditure, although weakness was still very much presented in its domestic demand. For the upcoming first quarter GDP data, Japan's economy is expected to slip back into contraction, partly due to production disruptions in the automobile space, affecting overall sales. This may, however, be elevated by strong tourism spending in the first quarter. Last but not least, we have Australia's employment numbers out on Thursday as well. For April, the market expects the economy to add 25,000 jobs and the unemployment rate to rise to 3.9% against an unchanged participation rate of 66.6%. Based on the rates markets are looking for a 25% probability of a rate rise before the end of this year. The odds of a RBA rate hike before year-end could rise, further pending this week's labour force report and the outcome of Tuesday's federal budget. That's all, and I will see you next week.